Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, and it's June 6th. We got a couple items here to note. Not huge news items, but a few out there, so we'll just jump right into it. We're going to start off with the productivity for the first quarter. We had this fourth quarter, we had a negative 0.5%. We figured it would kind of worsen a little bit, and it worsened slightly more than what we thought. So we had productivity seems to be worse than I think what people were thinking. Unit labor costs for first quarter. Our previous reportings were 2%, and we figured it'd have a slight dip, and it dipped more than we thought too. So that part's good. Obviously, unit costs are coming down a little bit, which is a good sign. But on the other hand, we have productivity dropping more than we anticipated. So obviously, we like to get productivity up more, get the economy moving. Later today, by 11 o'clock West Coast time, we're going to see the Bayes book, which will give us a lot more insight, a lot more news, what the Fed's thinking. So probably see a lot more volatility around 11 o'clock Pacific Coast time with the markets and stuff once they see what the Feds are talking amongst themselves. So that would be definitely a market movement. That would be an important piece of news. And now we'll jump over to the headline news and see where we're at. Stock market's up. Actually, Dow's up over 100 today, so Dow's looking really good right now. That's primarily because the president from the ECB, Draghi, had said they're going to continue easing measures until January. So, but he wouldn't give them the investors the meat and potatoes that they kind of wanted to know what specifically that they're going to continue doing to create these easing measures and stuff. So that was kind of the negative part, but so he just kind of left them in the dark right there. Also, Atlanta Fed President Lockhart said that Operation Twist is still on the table, so that will probably be good news to a lot of them in the stock market as well. Potentially in the bond market too. See how we react. We might be pricing that into right now. We could be pricing that into the market that they're going to be using probably this Twist program or quantitative easing 3 that pricing it in there. That's probably why the bond market is so high right now. There's speculation right now, but that's where we are right now. So right now we're going to jump over to the bond market and see what interest rates are doing thus far this morning. We started the morning off actually up a bit, about 8.8 basis points higher than where we left off yesterday, and now we're down about 9 from where we left off. So we're actually down about 18 basis points from where we left off for this morning so far. So we're putting some pressure on the floor here. So it is possible if they continue the rally in the stock markets that this could drop down. We could, as I mentioned before yesterday, we do have another area right down here, 104.40 and 104.60 would probably be the next drop where we would need for correction to take place since we have this opening gap here. So it is possible we could drop down here. I don't know if it'll be today. There's not really any news strong enough, but again, it depends on what comes out, especially at the Fed Beige book, what that says. So stay tuned, be aware what could go on. But right now, rates are worsening a little bit today. As we saw, we had this pretty sharp decline. We got this little trend now kind of developing here. As we had the sharp trend going upwards, now we have a sharp trend going downwards. So that's what they say. As fast as it goes up, as fast as it can come down. So anyways, rates are a little bit worse today, but again, these are still very high levels on the bond market, and rates are still very good. So go get them. You guys have a wonderful day. See you guys tomorrow, and stop by Mike's Daily Market Report and subscribe.